Okay, good morning, everybody. Today's business development call is featuring Franchise Resource. There are experts today talking to us about just keeping up with our books and preparing for year end, just some things to keep in mind and watch out for. So we've got Dillon and Kelly from Franchise Resource, and I will let them take it from here.
All right, let me share my screen really quickly. Can everybody see it okay?
It's
Pulling up
coming.
here, yep.
There you go.
All right. As she said, my name is Kelly Muller, and I am one of the directors of client services at Franchise Resource. And then we have Dillon Towey, who's the chief development officer and one of the partners at Franchise Resource. And as it's getting closer to year end and tax time, we just thought this would be a great opportunity to share with you from our point of view as bookkeepers and people that are doing books for some of the Gotcha Covereds and other brands, what's important, what to look for, kind of mistakes to avoid so that when it comes tax time, you're ready to go. You can have the meetings with your CPAs and your books are all tied up and good to go. And so I'm going to throw it over to Dillon here as just a little intro and a little bit about Franchise Resource.
Yep. Thanks, Kelly, and thanks, Gotcha Covered, for having us on. Just a little bit on kind of my role as partner and then chief development officer. My responsibility, I look over all of our new franchise relationships at the brand level and then also at the franchisee level. And then also manage and overlook our onboarding department. So anytime we're bringing on new clients as a brand or a franchisee, my department brings them onto our platforms and gets everybody up to speed. And then just in general, a little bit of background on Franchise Resource and just our history in franchising, I guess. My older brother Luke is the founder. He and myself got into franchising as franchisees in our early 20s with Anytime Fitness. And that was kind of our first experience with franchising. We grew to 5 locations over the next 5.5 years. And then randomly got approached by actually a counterpart franchisee in Denver, Colorado that owned 45 locations across Kansas, Missouri, and Colorado. For whatever reason, he had the appetite to expand into Nebraska. Don't ask me why. Approached us and said, I want to buy your locations. And about 60 days later, we found ourselves selling them, even though they weren't for sale. And then sat back for a little bit and realized we loved what franchising was all about. It helped us be successful as 2 young business owners, not really knowing what the heck we were doing. But we followed the blueprint and the guidelines that the franchise system had set up for us. But we wanted to learn franchising from a different lens. And so at that point, we both went on to the franchisor side and learned franchising from a different lens. We were there for about 4.5 years and allowed us to see franchising from the other end, right? And stayed there, really enjoyed our time. We ended up selling to private equity. And then for the last 13 years, we've had Franchise Resource where we support 65 franchise brands and their franchisees with their accounting requirements, bookkeeping requirements, and things like that. So we're lifelong franchisees. We love franchising and just always here to help and answer any questions you guys have along the way.
And now we'll get into a little bit. So I know we're talking year end and tax prep, but especially at Franchise Resource, we find it really important to keep up on things monthly and month over month, looking for certain things to be happening with either with us as your bookkeepers or whoever your bookkeeper is. And so these are just kind of things we want you all to understand are important. And if you're not seeing these things, you probably should be asking a few more questions or touching base with your bookkeeper just to make sure they're staying on top of it, so that tax time, when tax time comes, you're not kind of scrambling. And so one of the biggest things that we think is important, as far as monthly and at Franchise Resource weekly, categorizing your transactions, things that are coming through your bank in QuickBooks, those should be getting categorized, weekly, if not, monthly, if not weekly, so that at the end of each month that you can reconcile all of your bank accounts, your credit cards, your loans. And the reason that's super important is because there are times when QuickBooks, might have a little glitch and doesn't pull in all your transactions, and you might be missing things. And so if you're not reconciling those accounts each month, that's where you'll find that you're missing important pieces. There might be an expense missing, or there might be a deposit missing, which obviously affects your financials. It can affect them greatly. And so just the importance of making sure that either you or your bookkeeper are reconciling your accounts every month and making sure everything is accounted for there. And then as far as looking over your financials or receiving your financials, do you receive your financials in a timely manner? You should be getting financials every month from your bookkeeper or accountant. And this is important because you have to know your numbers, you have to understand them. And if you're not getting them in the first place to look over, it makes it hard for you to make business decisions and, make choices based on your financials. So you need to receive them to be able to do that. And then also, more important than receiving them is understanding them. So if you don't understand, what your balance sheet is supposed to look like, or what your profit and loss is supposed to look like, that would be a conversation you'd be wanting to have with your bookkeeper to review it, to make sure you understand it so that you can make, knowledgeable decisions. An example I put on there is cash flow versus profit and loss. Some people will say, my profit and loss looks great. I show I'm making money, but I don't have any money in the bank. Why is that? Well, that's because there are things that you're paying, loans, for example, that are not showing up on your profit and loss. They're going against your balance sheet. So some people don't necessarily understand that how things are reflected on your financial statements, which is an important piece to being able to understand, your cash flow that you will have or how you're doing as a business.
And one thing real quick on that too is, the stat out there is, for the first 12 months that somebody is in business, 80% of your decisions you make about and for your business should come from your financials. And so as new business owners getting into a franchise system, it's very easy to make emotional decisions. And you want to eliminate that as much as possible, and have your decisions about your business come from your financials. That's the stats, the data, that kind of tells the story, right? Shows where you're currently at, and you obviously know what your goals are. And after those 12 months, right, you can kind of maybe pull back a little bit on 80% being based on your financials. But very critical that and there's always going to be a time in place for emotional decision making, right? But you do want to limit that for the first 12 months.
That's great advice, Dillon. Thank you.
Another monthly item that we think is very important to keep on top of is sales tax. Sales tax is kind of a beast in itself because every state is different. And then within the states, you have counties and districts and different things there. And so we know keeping up on your sales tax is super important, and making sure that you either have somebody that understands it better than you, or that you understand it that well, just because the departments of revenue, they don't care if you're late filing. They're going to tack on fees and penalties, and they just you can complain or you can call and ask for forgiveness, but it typically doesn't happen very often. And so making sure that your numbers are accurate, because you're reporting sales and taxable sales each month or quarter, whatever your status is there. But That's why it's important to also have your financials and understand them to make sure that they make sense so that your filing keeper is filing that. Again, it's just avoiding those fines and penalties is they can add up really quickly. And so staying on top of this monthly and making sure that you know what you're doing with sales tax is very important. And then the last biggest thing we think is important as far as monthly is just your contractor payments. So anybody that you pay that will get a 1099 at the end of the year, somebody that provides a service to you is required to get a 1099 from you. And you are supposed to collect those W-9s before they perform the work or before they perform the service. A lot of times that doesn't happen. And it's very hard to collect from people after the fact because they've already gotten paid. So, you know, they don't necessarily have any urgency on their end to get you the right documents. And so just knowing who you're going to need to collect these from. So your landlords, anybody you pay rent to, anybody that provides marketing or advertising for you, the royalties that you pay, one I don't have on here, your accountant or your CPA, all of those type of services that you get, you are required to send a 1099. So it's just kind of knowing, having the knowledge and staying on top of getting the documentation there so that come year end, again, you're not scrambling to collect all these W-9s when it gets to be that time and you already have them within your system. And then also knowing the legal threshold for reporting purposes, like it is typically $600. If you pay somebody over $600, they're required to get a 1099. I do know with the new Big Beautiful Bill Act that it is going to raise, and I don't know if it's for the 2025 year or 2026, but that's something important just to stay on top of so that you can stay, you know, ahead of the game there and know what you're doing come year end.
So Kelly, on the W-9s and 1099s and all of that, is that part of the service offerings of franchise resource helping navigate all of that or no?
Yep. So when we're doing bookkeeping every month, we're requesting anybody new that we see come on or come through the bank, a check or a payment that comes through the bank. We're trying to request those from you guys, from the franchisees monthly. And again, it's just to stay on top of it because it's easy to kind of push that to the back burner, but we're trying to be there to remind you like, hey, you're going to need a 1099, you should collect it. And then we put that information in QuickBooks for you. We store the 1099. There's a spot within QuickBooks, the vendor file to keep it. And so you have all of that come year end. It's just ready to go. And so, and then, yep, we do process 1099s at year end. That's part of our year end package.
Okay, that is such a wonderful safeguard to catch that if it comes through the banking.
And then as far as year end, again, we're like the importance of doing things monthly to us is it's very important to keep up on that, but especially at year end, we want to make sure every account is reconciled to the last bank statement of the year. Most CPAs go in to make sure they pull the last reconciliation, they pull the bank statement, and make sure it all ties out because that's obviously important, you know, that they have something to tie out to for tax purposes. That you're reviewing your accounts receivable and your accounts payable. Again, we kind of help do this throughout the year. And if something looks off, we definitely bring it to your attention, but especially at year end, you know, we kind of reiterate, hey, look at your accounts receivable. If there's anything there that doesn't look right, if it looks, you know, if you're like, oh, these guys have paid already, I know that invoice is paid. There's technology is great, but there's also things that aren't great and that happen. And so sometimes there's something that syncs over twice or doesn't sync over right. And so that's where we're checking your accounts receivable, accounts payable, what you owe. That's important at year end time because you want to make sure you have all your sales included that need to be for the year, you know, so your numbers are accurate. Another big item that we look at is fixed assets. Again, throughout the year, we're adding them as we see them. If there's a large purchase, we're obviously going to ask the question, hey, what did you buy? You know, can we have the purchase document to make sure we get it recorded correctly? But for instance, if you purchase something in November and you finance it, we don't see that on our end until the first payment comes out. And if that doesn't come out until January, then it's a little bit late in the game. And so just keeping your bookkeeper informed on things that you're buying is important to make sure that they're getting on your financial statements where they need to be. So especially at year-end time, that would be a good double check, is to check over your fixed assets on your balance sheet, make sure everything's accounted for, because your CPA is going to need that information to know, what they're going to calculate for depreciation at year-end time. And then another big thing is just reviewing your payroll reports. CPAs a lot of times will try to tie out your wages that are showing up on your P&L to a payroll report, a year-end payroll report that comes out of your payroll system. And so making sure that your wages are recorded where they should be. A lot of times if there's anything recorded or paid as wages outside of payroll, we like to put that in a different account, just to, like, as a subcontractor or a contractor, to kind of keep those things separate, keep the numbers where they should be. And so just to review your payroll reports, make sure your wages are matching, or that what the discrepancy is really important, because if not, your CPA will likely ask you. And so that's also part of at Franchise Resource, we make sure that when your payroll comes out of your bank, the monies that come out, we reconcile that to a payroll report that comes out of the system each time. We make sure the wages and then the employer tax liability is recorded correctly. And so we do that from month to month at Franchise Resource, but it's important to check it over kind of at year end. And then just as far as organizing as a business owner, it's important to kind of stay organized, or stay ready for whatever comes up. And so making sure you're keeping your receipts. There's a lot of different platforms that you can use to keep track of receipts. You can even store them directly within QuickBooks. There's a receipts function, but just making sure that you have receipts for access when you need them. If your CPA will ask for something, obviously on larger purchases, a lot of times they ask to see it. We typically attach it right in the transaction within QuickBooks if you have it. Bank statements, those we attach with the bank reconciliations each month within QuickBooks. But if your bookkeeper is not doing that, just to make sure that you are keeping them on your end somewhere, that you can kind of turn those over when the time comes, or if they're requested by your CPA or by somebody. W-9s and 1099s, same thing I talked about. We store the W-9 in the vendor file in QuickBooks, but if you don't store it there, make sure you have it somewhere, because if you were to ever get audited, they're going to ask for the W-9s. So it's important that you keep those on file to back up the 1099s that you're filing. They're going to ask for the backup for it. And then just making sure that your files, they're in a place that you can either back them up or out on a cloud somewhere or something, so that if your computer crashes, you have them somewhere, or you have access to them. It's just super important to make sure you kind of cross your T's and dot your I's where needed to make sure you're covered. And so just as far as how having a bookkeeper, having somebody at Franchise Resource, how we do our monthly processes, how that helps, they're obviously keeping up with your reconciliations. So we're doing those reconciliations every month, to catch things when they happen. If you're not doing a reconciliation, or if you don't have a bookkeeper that does it, and they do it 6 months down the road, and then it's like, oh, there's this transaction back in April, what is this for? It's really hard for us to remember what we did last week, more or less, 4 months ago. And so keeping up on it and making sure that you're getting the questions asked to you monthly and catching those things monthly versus, quarterly or semi-annually, that's super important. And so your bookkeeper should be doing those for you to help you stay on top of things. Also just making sure that your financials are aligned with how the franchisor needs them to be. So they have certain regulations, certain chart of accounts, that are getting used. So we make sure that it's the same across the whole brand, that we're posting things the same everywhere. And so that helps you stay in compliance and making sure that your reporting is where it needs to be, not only for you, but for the franchisor also. Just keeping your records organized. We work to have all the documents in place and where they need to be, and requesting the documents when they need to, when we need them. And so just keeping all of that organized for you, it kind of takes that off your plate so that you can run your business. We're kind of in the background making sure all of the things are where they need to be so that you don't have to be. And then CPA reporting and meetings. So at the end of the year, a lot of times your bookkeeper can, or probably should be on a call with you and your CPA. And all that just helps so that, we can help answer the questions that the CPA has. We're very familiar with accounting knowledge, lingo, jargon, that type of things. And when we're in your books all the time, we're very familiar with what's happening. And so they can ask us questions, and you don't really have to be the middleman. They don't have to ask you to forward on to us for us to respond. So if we're just all on the same call, or if we have the contact with the CPA, they can ask us directly, which, in the end, that is less time that the CPA has to spend solving issues and solving things that are out there, and they can sit there and strategize with you and talk strategy on how to mitigate your tax liability, or the other side of the business. That's what you should be spending your time with your CPA, not answering the day-to-day questions that we can help answer there. And we all know, as far as CPAs and tax time is money. And so it's important that you're spending your time with your CPA wisely, to save yourself money and to make sure you're getting, the most bang for your buck.
A little bit, one little thing on that too is, obviously we have the desire to work with as many franchise owners that got you covered. And with that said, I strongly encourage you, whether you work with us or work with somebody, another firm, a CPA, bookkeeper, what have you, do not do your own financials in your day-to-day bookkeeping and accounting. It is paralysis by analysis, specifically for once again, the first 12 months. It distracts you, and it's a terrible use of your time when generating revenue for your business in the first 12 months should be the number one priority. And so we see it time and time again, right? When franchise owners, business owners try to take this piece of the pie and do it themselves, it generally does not get done correctly. But then they circle back with us after the fact and say, I haven't done reconciliations for 6 months. Can you guys catch us up to speed and get things cleaned up? But all while that's happening, they're spending time on a monotonous exercise that's taking them away from the number one priority of generating revenue. And so with the average ticket for Got You Covered, and the cost that of our service and solutions that we offer, it's a very a desirable price point in comparison to your guys' average ticket. So just something to think about as you're going through and kind of trying to evaluate there.
Yeah, I would second that. Having been a business owner and done my bookkeeping myself for a while, I did have some experience with that prior to that, so that was helpful. But the time commitment to do that, yeah, in retrospect would have, yeah. By the time I handed that off to someone, I will tell you, it was a huge gift to have those days and hours available to build the business. Instead, not to mention just a huge stressor relieved.
Yeah. Yeah. No, spot on. I think it's one of those things where we want to teach you guys how to fly the aircraft. We don't want
Mhm.
you guys to have to build it, right? And so the
Right.
same thing applies where you should not be building your financial statements. You should be looking at them once a month, evaluating them, seeing what's going well, and doing more of that, and seeing what's not going so well, and trying to find a resolution and pivot from that, right? So yeah, you're spot on that.
Yeah, it's part of running the business instead of having the business
Yes,
run over you.
absolutely.
Yeah.
And so then as far as next steps, if some of these things have kind of raised red flags to you, excuse me, that like you are not getting financials, or oh gosh, I have subcontractors and I haven't collected W-9s, or any of those kind of have thrown a red flag or kind of caught your attention. I would suggest some of these items as your next steps, that start working on this now before it gets to year end and tax time, because it just gets hectic. It gets crazy around that time of year. And then, if you get it to your CPA last minute, they're going to be needing to ask questions and follow up here. So now is the time to start and get things in order and start asking the questions, versus waiting. And so I think you need to, schedule a review with your bookkeeper, with your CPA. If you have questions around certain items, now would be the time to start asking those, so that you have a plan to finish out, 2025. Start gathering your documents. Make sure, if you don't have W-9s, if you don't have your receipts where they need to be, or statements, you need to start gathering those. If you don't understand your financials or you have questions, now's the time to ask them. You start now. Anything that you have questions on that doesn't look right, or just in general, your bookkeeper should be able, or CPA should be able to answer those for you, so that have peace of mind with your financials, and you trust that they're accurate, and that they're accurate come year end time. And then really just, it's important now, and a note moving forward, to stay organized. In the future, if you're not now, you'll learn very quickly the importance of being organized and having things done timely and consistently throughout the year, and how much that will help you, at the end of the year. And you'll appreciate it. You will never regret, you know, having a bookkeeper and having an accountant do these things for you, like Dillon and Michelle have both said, so that you can focus on building your business and kind of take this off of your plate, so you don't have to worry about it.
The example I always say is, stay in your lane, right? The most successful businesses always hire people to do the things that they cannot do or should not be doing. So I can tell you right now, if Franchise Resource had me doing the marketing and advertising, we probably wouldn't be around right now. I mean, and so it's one of those things, right? You gotta find what you guys do really well and focus on that, and then outsource, hire, lean on the support from corporate to do the things that you guys aren't best at.
And I believe that's all we have on our end. So I don't know if there's anybody that has any questions, or Michelle, if you get any questions after the fact, you can definitely send them my way or Dillon's way, and we'd be happy to go over anything or talk with them on anything that they have.
Yeah, one that I think that would be valuable is if you guys can spend a minute just talking about, not everyone understands the difference of what they would be talking to their bookkeeper about versus what they would be talking to a CPA about, and how those two services are both differentiated and where they kind of work together for best practice.
Yeah, I can start off on that, and then Kelly, you can piggyback. From being a business owner for a number of years and kind of going through it, and early on, not necessarily understanding all the differences, right? Is a bookkeeper is really somebody that focuses on the day to day, the week to week, and the month to month exercises and obligations for somebody's financials. A CPA, right? And generally an accountant does not really want to spend any time at all coding transactions, dealing with reconciliations. They want to file tax returns. And so their appetite to understand gotcha linked or understand the specific franchise model, that's really not in their cards. They want to file as many tax returns as they can. So as we try to create and make your financials as clean as possible, reconciliations are done, all the things, your CPA should come in at the end of the year and really talk strategy for you. So not doing any bookkeeping and accounting, but really looking at where you're at holistically, from your business. Maybe you own real estate. Maybe your wife is, or your spouse is employed. Maybe not. Looking at all, these different pieces to your financial picture and saying, hey, Rich, I think it might be a really good idea to potentially buy a vehicle under the business name next year, or that would help mitigate any tax liability that you need to pay in, or some of those type of exercises and information. We're all in business, small business, to make money and not necessarily show the government that we are, right? And it's a benefit to being a small business owner. And so accountants, CPAs should be as aggressive as possible for you to help mitigate any tax liabilities you guys have at the end of the year.
Yeah, just to add to that, so I think as your bookkeeper, they're the ones, they're in the weeds of the detail, the little detail behind the scenes. When your CPA gets your financials at the end of the year, they just want a balance sheet and a P&L, and again, like Dillon kind of said, they want to talk tax liability and how you can, show more expenses or buy an asset that would help the business. And so I think asking your bookkeeper the questions you would be asking are month to month, like, hey, why is my advertising higher this month? And we can look and, dig in there. Or my sales don't look right. Can we look at the invoices that have come in or that we have recorded? So like asking to kind of dig in the weeds of your financials from month to month would be on the bookkeeper, I think. And then again, CPA, they're just big picture. They just, sales and expenses and assets, and they kind of like to just take what you give them and do their thing and report on that side of things, if that makes sense.
Yeah. Okay, does anybody else have any questions that they want to ask Dillon or Kelly? I'll watch this chat for those to come up, or you can just unmute and ask. Another thing I would say is make sure that you're having your CPA review everything in the fourth quarter. So if there are any adjustments and changes strategically that have to happen before the end of the calendar year, you still have time to do that versus setting up with them, a month ahead of the actual filing date.
Yep, and that's what we have a lot of meetings getting set up with CPAs this time of year. Like we're in on those meetings this time of year. If your CPA requests, or if you think you should have a meeting, this is the time to do it. And so that's very common to start your meetings, October, November, to make sure that you finish out the year where you need to be.
Cool. Okay, I don't have any questions popping up, so we will post the recording for the rest of the base, and then Kelly and Dillon, can you share just the best way to get a hold of you all if people want to ask you questions or talk any further about this?
Yes, I can. The best way, honestly, is email to start off. And my email is just Dillon, Dillon franchiseresourcellc.com. And I can send that over to you, and then you can kind of spread that out as well. I know we have
Yeah.
I know we have a one pager in your guys's database as well, with a kind of a QR code and some contact information in there as well on how to get in touch with us. So
Okay. And then we do have a question on if you work with our Canadian owners as well.
we currently do not have a Canadian owner. However, we will and can work with Canada locations.
Okay. Wonderful. Thank you.
Yep.
Okay, so Dillon, if there are questions, do you want those all funneling to you, or should we share Kelly's contact information also?
Yeah, Kelly, if maybe me and you can just both put our emails in the chat,
Yep.
and then and so yeah, if you guys wanted to send over the questions to both of us, you can put us both on the email, and we can whoever's best to respond will do so.
Wonderful. Okay, you all, thank you so much for joining. And Dillon and Kelly, I'll share this out to the whole base later this afternoon once the recording goes live, and forward any questions your way.
Can you also, one request, could you send that this to us as well, or to the meeting?
Of course.
Awesome.
I'd be happy to. All right.
Thank you so much. Yep.
Thanks
Have a good day,
for having us.
guys.
See ya.
Have a good
Thank
day.
you.